All right, today we are diving into an absolute classic for any trader, Mark Douglas's Trading in the Zone. And look, we're not going to talk about charts or indicators today. Nope. We are going straight for the big stuff, that 90% of the game that happens right between your ears. We're talking about the mental game.
So let's just kick things off with a number that is, well, it's pretty staggering, almost hard to believe. You hear this stat all the time. 95% of traders fail. They lose all their money, and it usually happens within their very first year.
And that just begs the question, why? I mean, we're talking about really smart people here. Doctors, lawyers, engineers, you name it. People who are incredibly successful in everything else they do. But then they step into the market and, bam, they get completely wiped out. So what is really going on here?
Okay, that brings us right to our first big idea, something the book calls the trader's paradox. And this is a fascinating concept. It's the idea that the very skills that make you a winner in life, well, in the market, they can become your biggest weaknesses.
And you can see the conflict right here. Think about it. In your career, in life, you're rewarded for finding certainty, for being right, for controlling the outcome. But the market, oh, it's the total opposite. It's just a world of nonstop uncertainty. Losses, they're just a part of the game, totally inevitable. And control? You have absolutely zero control over what the market does next. You know, Mark Douglas just hits the nail on the head with this. He says, and I'm quoting here, "It turns out that the skills we learn to earn high marks in school, advance our careers, and create relationships turn out to be inappropriate for trading." I mean, think about that. The mental toolkit you've spent your entire life building is basically mismatched for this environment. You have to unlearn what you have learned. So, if all our normal life skills are actually working against us, what are the specific mental traps that we keep falling into? Well, Douglas points out 3 really dangerous lures that seem to catch almost every single new trader.
And here they are, the 3 big ones. First, there's this weird unwillingness to create and follow rules, probably because we want that feeling of total freedom. Second, there's the failure to take responsibility. You know, it's always so much easier to just blame the market, right? And the third one, oh man, this one might be the most dangerous of all, the addiction to random rewards.
Just think about a slot machine for a second. That one totally unexpected jackpot? It's so thrilling, so exciting, it keeps you pulling that lever again and again, even when you're just consistently losing money. It's the same in trading. That one lucky, unplanned trade that just happens to make a huge profit, that might be the most destructive thing that ever happens to you. Why? Because it gets you hooked on randomness, not on a consistent, repeatable process.
Okay, so that brings us to the core solution in the book, which is really a complete shift in how you see everything. To beat the odds, you have to stop thinking like a gambler and start thinking like the house.
All right, so if we're fighting our own instincts, if we're getting hooked on random wins, what's the solution? What's the way out of this mess? How do the pros really do it?
And here's the kicker. The answer isn't some better technical indicator or a secret formula. No. It's a complete psychological rewiring. It means you have to stop thinking about being right or wrong on any one trade, and instead, you have to start thinking purely in probabilities.
Now, this right here, this is the aha moment for so many traders. At the micro level, if you look at just one single trade, the outcome is completely random. Seriously, anything can happen. But at the macro level, over a whole series of trades, let's say 20 or more, all that randomness starts to smooth out. And that's where your statistical edge can actually produce consistent, predictable results. It's exactly like a casino, right? The house has no idea what the outcome of the next hand of blackjack is going to be. It could be a huge loss for them, but they know with absolute mathematical certainty that over thousands and thousands of hands, their tiny statistical edge guarantees they'll make a profit. Your trading edge works the exact same way, but only if you let it play out over a large sample size of trades. And this is the belief you have to burn into your brain. The quote says it all. Each individual hand played is statistically independent of every other hand. What happened on your last trade, whether you won or lost, has absolutely zero impact on what's going to happen on your next trade. Each moment is a fresh start. Okay, so believing in probabilities is one thing, but actually acting on it, well, that takes something even deeper. It requires truly, genuinely, and completely accepting risk.
But what does that even mean, to accept risk? Look, it's not just about putting a stop loss on your chart. It's a whole state of mind. It's the ability to put on a trade without any fear,
without any hesitation, because you have genuinely, deep down, accepted that any outcome is possible, and you're okay with that.
Because think about what happens when you don't truly accept the risk. You end up trying to avoid it, right? But the risk is unavoidable, and that attempt to avoid it leads to all the classic trading mistakes. You hesitate to pull the trigger, you move your stop loss down hoping the trade will come back, you cut your winners way too short out of fear, and the results? They're always disastrous.
And this distinction right here is everything. There is a huge, massive difference between just taking a risk and truly embracing it. The real goal is to get to a place of calm, objective execution, where the market's randomness no longer causes you any emotional pain.
Okay, this all sounds great in theory, but how do you actually do it? How do you rewire your brain to think this way? Well, it all comes down to one thing: your beliefs.
Douglas makes this powerful argument that we never, ever see the market objectively. We always see it through the filter of our own beliefs. And a belief isn't just some passing thought. No, it's the very lens you see reality through, and it actively controls what information your brain even pays attention to.
He gives this brilliant example in the book. Imagine a guy standing on a busy street corner with a sign that just says, "Free money, today only." And almost nobody took him up on it. Why? Because most of us have this deeply ingrained belief that there's no such thing as a free lunch, right? That belief literally made them blind to the opportunities staring them in the face. And believe me, the exact same thing happens in the markets every single day.
So what's the antidote? What's the one core belief you need to actively install in your mind to counteract all this? Here it is. The single most powerful belief a trader can have is in the uniqueness of each and every moment.
Because when you truly, deeply believe that, it's like a circuit breaker for your emotions. The pain you felt from your last loss or the giddiness from your last big win, it can't infect your decision-making now. It totally frees you up to see what the market is offering you in this present moment with complete clarity and objectivity.
And really, that's the final idea to leave you with. It forces you to look in the mirror. If your beliefs are what create your results, then the most important question you can ask isn't what's the market going to do next, but rather, what belief is holding me back?